Moving on to thing number three, we're talking mega cap tech companies. Gary, they had great quarters. Guidance was a bit mixed though. Thing number three, Gary, mega tech earnings week.
Well, you nailed it, Rob. That's pretty much the whole story. I think we're good.
I'm
So,
sorry. I don't
yeah,
know what the rest of these paragraphs are about then, but
yeah,
that's
no,
it. That's it.
that's pretty much the story. Moving on. No, listen, the Magnificent Seven had great fundamental results. Google beat revenue with 88.3 billion. Meta and Microsoft, Meta's Facebook, really. I'm tired of these name changes. We're calling it Facebook, and I refuse to call Google Alphabet. They beat earnings estimates. Apple and Amazon had a great quarter. Apple actually reversed their they've had quarter after quarter of device unit sale declines. They were selling fewer iPhones than they had been in prior years. Their sales, their units were up 6% year over year. So they're getting some of that. I mean, basically, they all had really good quarters, but five of the seven had their stocks down, not horribly, but a little bit last week. Only two were up. Again, not a huge amount, but there it was. And the reason for that is the guidance wasn't great. There are a few things going on. One, some of these companies are saying, yeah, we're not so sure on revenue. The economy isn't as good as the government keeps telling us it is. More importantly, a lot of these companies are spending enormous amounts, tens of billions of dollars on AI infrastructure. And no one really has a business model for that yet. So right now it's a lot of spending without associated revenue. And we're seeing that as well, really all over the place. A lot of this just comes down to concerns about a potentially weak economy and a lot of AI related expenses. And so, because the guidance was weak, five of these seven stocks were down last week. But again, they weren't down a huge amount. The worst was Tesla, which was down just under 8%. Not a great week, but not the end of the world. And Tesla had previously announced, some really good news on their quarter. Their unit sales were really strong. Amazon and Google were up a little bit. So, it was a bit of a mixed week, not what you would expect from a group of companies that reported really strong earnings.
Gary, my question is, a lot of times you get these earnings reports, you see beat revenue, right? Price per share, etc., earnings on shares, and you go look at the stock and the stock's down 5%, 6%. A lot of times then you come back and you look at the guidance. Obviously, the guidance was weak. How do you weight kind of guidance versus the actuals, right? When you're taking into account the big picture, just curious how you look at one versus the other. Or do you put more weight in one side versus the other?
Yeah, so and this is a huge
Generality.
generalization, Rob.
Yeah.
uh, Frequently, amateur investors will look at the historical results because, of course, they do, right? They had a good quarter, revenue was up, earnings were up, they're happy, terrific. Professional investors tend to place a big discount on whatever happened yesterday and are looking forward. So, if a company reports a really strong quarter and then says, but we're lowering guidance for next quarter because we think business isn't going to be so terrific, our expenses are higher, we just lost a customer or a contract, the business environment isn't so good, 9 times out of 10, that stock is going to go down. Now, there are definitely exceptions, and somebody could come up with a hypothetical example of a combination of, we beat in the quarter and lowered guidance, but the way it happened and the language used would still cause the stock to go up. But generally, if you beat and then lower guidance, professional investors who are looking at the forward numbers, looking at what's going to happen tomorrow, the next quarter, the next year, most of the time you're going to be looking at a declining stock.